honor to invite Mr. Ittai Ben Ze'ev, the CEO of the Tel Aviv Stock Exchange. Please.
Hi, everyone, and thank you very much for joining us today. Before I dive into the Israeli capital markets, we're going to have later on Nati Ginor from Jefferies heading the investment banking activity of Israel. I wanted to convey my sincere thanks for Jefferies for the outstanding donation that they've made, $8.6 million for humanitarian aid. After they saw the atrocities that Israel went through, they made a very significant move, giving this huge amount to 10 charities in Israel for the best purpose it can be. So thank you very much for your continued support. The Tel Aviv Stock Exchange has equities, debt, derivatives, and all kinds of products. And I'm going to start my presentation by showing you our equity market. We obviously have a strong equity market. All of the numbers here are as of 31st of October, 2023. We have 538 listed companies. The market capitalization is $213 billion US, free flow 62%, and the total equity capital that was raised since the beginning of 2020 until the end of October 2023 is $21 billion. On the right-hand side of the chart, you can see that our companies are well diversified. We have, I think, all of the segments that you can imagine. Our three leading segments are the high-tech, around 30%, real estate, and financials. And I think that it gives a solid exposure to the Israeli economy. When you look at our leading indices in the 2020 and until the end of 2022, actually our leading indices were among the leading in the world. The TA90 actually outperformed even NASDAQ and S&P 500. Clearly, 2023 was a complete different picture. Even though it seems ages ago, until 2 months ago, everyone in Israel was in discussions all the time about the proposed judicial reform. Actually, since January 2023, when the judicial reform came to our life, that was the main theme, not only about Israeli politics but also in our capital markets. We saw a continuous shift of funds, both from institutions and also from accredited and retail investors, moving funds outside of Israel. And clearly, it had a very negative impact on our leading indices. As you can see, this year we are far away from what happened in the world, but you have to remember that our economy, our country actually went through two extreme events. One is the judicial reform that clearly when the war started, it became irrelevant. And the second event is the war itself. Following what the government has demonstrated, I want to give you one example of the actual effect, because, in Israel, unfortunately, we have a lot of experience with war, and we all hope that one day it will be completely irrelevant, but first we have to make sure that our borders are safe. And we chose one example of the Second Lebanon War. You can see in the chart that it shows the TA125 since June to December in 2006. You see when the Second Lebanon War started, in the first two trading days, the TA125 went down by 8.2%. After 40 days after the war began, the index came back to the same position, but throughout the rest of the year, the index rose by roughly 10%. And this is a good example of what the government talked about it, that usually in the world and specifically in Israel, after military operations and wars, because of the resilience of the people, the good fundamentals of our economy, our indices performing well. In the current situation that we are having since October 7th, you can see that in the first couple of weeks, our TA 125 went down by 13.5%. It almost returned all of it. According to the closing of yesterday, we were only 2.7% lower, and today the market continued its progress, so this number is even lower. And we believe that as long as things will be under control, our market has a long way to keep performing well, given all of the strong fundamentals that we have. We also have a very strong and deep ETF market. We have overall 81 ETFs that are being traded on the Israeli equity indices. You see on the left-hand side that the public holdings in total of all of those ETFs currently more than $11 billion, and it shows the depth and strength of our equity market. Moving to our debt market, in Israel we don't have OTC trading in bonds, but bonds, both government and corporates, are being traded on the exchange as if they were equities. So when you look at the government bonds, according to WFE publications, our exchange is the second most active electronic exchange for government bonds in the world. The aggregated market cap is $146 billion. The ADV, the average daily volume, was since the beginning of the year until the end of October, $735 million, and we have 35 bond series. Moving to the corporate bond, where we are the fourth largest trading volume venue in the world, the total market cap is $104 billion. The average daily volume is approximately $300 million a day, and we have 732 bond series. In the corporate bond issuers, clearly TASE is a central source of financing for Israeli companies. We have also companies that issue debt even though they don't have their equities being traded in the exchange. You can see that in the past few years, we've had between $20 to $30 billion a year in issuance, and most of the issuance is through the general public offering, but we also have a small bit in the platform of TASE, which is actually our private market that only institutions and accredited investors can tap in. And we believe that this platform will continue to be an extremely important, not only in times of war, but also in times of prosperity and the positive functioning of the war. If you look at the government bond issuance on TASE, clearly in 2020 and 2021, there were very substantial amounts of issuance. You can see $38 billion in 2020 and $32 billion in 2021, clearly because of the COVID. 2022, we went back to $12 billion. And in 2023, since the war began, the government already issued approximately $6 billion and counting. All of the issues that took place in the past 8 weeks was very successful, both on the demand side and also if you look at the spreads. Overall, you have to remember that we have institutions that have a lot of money in Israel. The general public has a lot of money. I will show you at the end a slide about it. So the government has the ability to continue to raise substantial amounts of debt, which is clearly very important. And as the government demonstrated before, our low debt to GDP is a very important factor going forward. Also on the debt side, we have a very deep and diversified ETF market. We have approximately 140 ETFs that track Israeli bond indices. The overall amount of public holdings is around close to $8 billion overall, and this is also something that gives a positive momentum for this market to continue and evolve. I want to talk really briefly about the market potential. I think that everybody saw from the presentation of the government the resilience and the depth that our economy has and why we are all optimistic that our economy will continue to prosper. But when you dive into our capital markets, clearly we have many things that we can leverage and continue. And I want you to have a look at the 125 US billions money of retail in Israel sitting in checking accounts. When you look at our economy and you compare to any other Western society in the world, you see that the amount of money which is ready to invest relatively to the size of the economy of the GDP is the highest in any Western economy. One of the reasons is that even though our economy has progressed, our capital markets and the understanding of the retail and the way it's being distributed is not developed enough. And hence comes the opportunity for the market and for individuals to invest not only more, but also to start invest and have exposure to our equity market and to our bond market. And we believe that this is one of the growth engine of our market. We have seen through the COVID many individuals that opened accounts and started to trade. And the few brokers that we have in Israel have demonstrated a very significant growth, but still, when you look at the overall numbers, we are far below other economies. The second element that I want to highlight is given the high rate of saving of the Israeli public, our Israeli institutions have a lot of money, not only the AUM that they run, but the constant inflows that they're getting every month. In the past year, a lot because of the proposed judicial reform, the majority of the inflows went to invest outside of Israel, whether it's equities, debt, alternative investment, real estate, whatsoever. We have seen in the past few weeks a major change in the behavior of the Israeli institutions, not only because they are accustomed to military operations and war in Israel, but also because they understood that the judicial reform that was a major concern became irrelevant, and because when you look at our TA 125 multiples compared to other markets, we are cheap, and also because of the understanding of the history of what happens after the war is concluded. So if you look at the Israeli institutions, until the war, they invested only around 3 billion shekels in our equity market. Since the beginning of the war, they already tapped this number. They already invested more than 3 billion shekels in the equity market. And of course, we have other investors and international investors, but we see a significant change. And for us, this is part of the market potential going forward. And being the startup nation, clearly, we have more than 300 Israeli high-tech private companies that their theoretical market cap is $50 million and above. So when you look not only on the strong resilience of our market, but also on the pipeline and the companies and the interests that we can accumulate all together, we are optimistic about the future growth of our market. Thank you very much.
Thank you, Ittai.